Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. Friday, May 29th, 2026, stocks printed fresh records, but it didn't feel like a clean, broad rally. This was a narrow push. AI hardware and enterprise software doing the heavy lifting, while defensives and small caps leaked lower. So, the tone, selective risk on, strong where the catalyst is obvious, heavy everywhere else. Now look at the S&P 500 heat map. It's totally bifurcated. You've got extreme green concentrated in software and infrastructure pockets, plus select big tech and financials. But there's a wide spread of red through consumer staples, healthcare, and energy. And even the megacap story is split. Microsoft stood out as a major green engine, while other megacaps leaked red or just stayed muted. That's your masking effect today. So what's the flow behind that heat map? It's not a market-wide chase. It's risk-on within tech, enterprise and AI infrastructure winners getting paid. While defensives acted like a source of funds, financials joined in as a pro-cyclical sleeve, but the bigger tell, small caps didn't confirm it. The Russell 2000 finished lower, which keeps the participation question front and center. That sets up the core tension. The index is making it look easy, but the tape is acting tense. Dispersion was the unusual feature here. Massive single-stock moves on one side, and air pockets in defensives on the other, and the internal contradiction mattered. It was an AI-themed day, yet Nvidia finished down. The risk posture isn't fear, it's selectivity. Traders were willing to add exposure, but mainly where the catalyst looked undeniable. On the chatter side, unconfirmed, but it really shaped the conversation late. We heard desk and retail talk about a massive Palantir options print near the close, framed as a whale-sized wager going into next week, plus separate flow chatter around CoreWeave call activity tied to late May expiries. None of this is confirmed fundamental news, but it feeds the exact same storyline. Attention and positioning are getting more aggressive in a small set of AI-adjacent names, and that can raise crowding risk. DELL was the cleanest driver on the day. Shares surged about 33% after an earnings beat and raised full-year guidance, all tied to surging AI server demand. The market treated it like hard confirmation of the AI build-out, less talk, more numbers, and when a hardware name gaps up like that, it pulls the whole AI plumbing theme right back into focus. Microsoft was another major piece of the index story. It rose just over 5% and acted like a total liquidity magnet. One of those big green engines that can keep the S&P 500 and NASDAQ supported even when participation is thinning out. The available sources don't pin it to one single headline today, but the move fit right into the broader enterprise and AI software bid. Oracle was a standout in the enterprise software leg, gaining almost 11%, with reports tying that strength to an AI cloud focus and sector sympathy as infrastructure software surged. The way this traded today really mattered. It reinforced that the market is rewarding enterprise spend plus infrastructure, way more than broad generic tech exposure. Nvidia was the tell everyone noticed, finishing down about 1.5% on a day where the AI narrative was front and center. The read here? Profit-taking and rotation within the AI complex. Hardware beneficiaries like DELL led, while parts of the core chip trade lagged. That doesn't kill the theme, but it absolutely highlights fragmentation in leadership. Palantir added to the software euphoria, up just under 7% on momentum in AI software names, with late-day options chatter pulling extra attention. Again, that flow narrative is unverified. But as a tape read, Palantir often trades like a sentiment proxy. When it's running, it signals speculative appetite that can reverse in a heart. Costco was a clean example of the defensive sell pressure. Shares moved lower after earnings. The inputs describe it as post-earnings digestion where results actually beat, but the tape treated it as priced for perfection. And in today's rotation, defensives were used as a straight-up funding source for higher-octane AI and enterprise tech leadership. Looking into next week, the calendar is the catalyst list. Monday brings ISM Manufacturing at 10 a.m. Eastern, Tuesday JOLTS job openings, Wednesday stacks ADP at 8:15 a.m., and ISM Services at 10. Thursday is weekly unemployment claims at 8:30, and Friday, the monster U.S. jobs report, non-farm payrolls, average hourly earnings, and the unemployment rate. With breadth already looking narrow, traders will be watching to see if the same AI and enterprise winners can keep carrying the indices, or if macro data shifts the balance back toward broader participation concerns. So, here's the wrap. New records, but achieved with highly concentrated leadership. AI infrastructure and enterprise software did the heavy lifting. while defensives and small caps just didn't come along for the ride. Next session, it's less about the record print and more about the follow-through. Do more groups join the rally, or does the market keep leaning on the exact same few names? Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.